On today's episode, we are going to take a look at two Chinese stocks that are down big today, and maybe not for the reason you think. Actually, I don't know, right? Because I actually don't know what you're thinking, but it might not be for that reason. The first stock we are going to take a look at is Huya. This is traded on the New York Stock Exchange as ticker HUYA. Is down about 1.85. The second one is going to be Doyuu, or Doji. I'm pretty sure I always butcher this name, and it's down about 8.5%. So both of these are Chinese stocks in the same market, the live streaming gaming market. If you've heard of something like maybe Twitch, if you heard of YouTube gaming, any live streaming content place, this is what they do, but for China. If we go to real quick to Huya.com, right, we can see the top categories are some of the major plays out there. So Huya and Doyuu both are leaders in this market, right? Huya, we're gonna see, is probably one of the top dogs right now, but Huya and Doyuu were supposed to merge to make this super streaming service. There was a few new, I kind of talked about it in last week's episode when I was talking about some Chinese stocks, that this merger was kind of going to be rejected. There were news from sources that said it was going to be rejected, but it wasn't officially announced. Today, on July 12th of 2021, to this morning, it was announced by both Huya and Doyuu that the merger is done. It's not going to happen. So that drove stock prices down. Now we're going to see Huya is down about 1.72%, but Doyuu is down 8.4%. Why? Why is one down more than the other? And I want to say a good reason for this is when Huya and Doyuu were going to merge, Doyuu shares were going to become Huya shares. And the overall way the transaction was happening, it made more sense to buy Doyuu. And if the merger did happen, they would have turned to more Huya shares opposed to just buying straight up Huya shares. The reason some stuff like that happens is because of the risk, right? What if the merger didn't approve? So there's always risk added, and because of that risk, you usually see a lower price. So that's what ended up happening. Doyuu right now, all those people that probably wanted to enter Huya through Doyuu at a better rate, now that the merger is not happening, are probably leaving Doyuu, and it's really decreasing the stock price. So now that we understood what happened, it's really as simple as that. I want to see which one is the better buy, or which one is the one I enjoy the most right now. So we're going to take a quick look at their fundamentals. But before we get there, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So Huya, like I said, is traded on the New York Stock Exchange as ticker HUYA. Doyuu is traded on the NASDAQ as ticker DOYU. First, like I said, they're both Chinese stocks, so there's risk, right? And Huya is in my portfolio right now, but I understand that there's risk investing in international companies and Chinese companies. So for that reasons, I limit my exposure. I know there's some people that just don't enjoy investing in Chinese stocks. That's okay, right? I feel like every investor has their own risk tolerance. And if you don't enjoy investing there, that's fine. You don't have to. So let's take a quick look at just how these companies are looking. First, I want to see how they are in forms of revenue. I want to see who is really the top dog. And here I'm taking a look at yearly information. So for the full year of 2020, we can see Huya makes a little bit more revenue than Doyuu. Huya is here at 1.67 billion in United States currency, where Doyuu is about 1.47. And for the past 5 years or so, Huya has always been the leader. All right, so Huya gets there. Then if we take a look, I'm taking a look at gross margins and profit margins. So gross margins are in blue. First thing I'm seeing, again, Huya has higher gross margins than Doyuu for the full year of 2020. They also have higher profit margins. Profit margins 8.1 for Huya Huya, about 5.1 for Doyuu, gross margins 20.8 for Huya, about 16.3 for the full year of 2020 for these two companies. So we can see, right, Huya is definitely a nice player right now when we're talking about leaders. Next, I have something even more important. This is net cash flow from operations. This is probably my favorite metric to look at, or my favorite financial. We'll take a quick look at some metrics in a bit. This is probably my favorite financial part to look at, and we can see again Huya is the leader here. Net cash flow from operations in the most recent year was about $189 million in US currency for Huya, and about 102 for Doyuu. So Huya is definitely the leader, and that's why Huya for 2020 was what I consider a tier 1 stock for me. A tier 1 stock was a stock that I enjoy adding a big position over time. Still, it didn't make up because it was a Chinese stock. I think it's about 3% of my portfolio at the time. Right now, I believe it's a bit smaller. But let's keep going on. Let's take a look at future growth. Huya right now is expected to grow 14% on average for the next 3 to 5 years. Doyuu is expected to grow 13.9%. So Huya is still, again, the leader. Doyuu is not far behind. If we take a look at balance sheet, Huya has about 10.7 billion in Chinese yuan. That is their local currency. No debt. Doyuu right there is coming in pretty much no debt, but $7.5 billion in cash and short-term investments. Both of them do have a very strong balance sheet, which looks pretty insane. But again, Huya has those better numbers. Now let's take a quick look at technicals, right? This is something I haven't looked at. I didn't pull up, so let me get that. And I just know, right, these stocks have taken a huge beating. So the first thing I'm going to know is Huya is not overextended at all. I want to say it's actually sitting at some great support level. That's just my opinion. Doesn't mean the stock price can't continue to go down. If we look at Doyuu though, this is an unknown territory. It's fallen off a lot of support. It's kind of just trying to rebuild a base. Obviously, stock prices can continue to go down, but I want to say Doyuu right now might be a bit overreaction compared to the overall news. Compared to Huya, Huya's a bit more relaxed. I want to pull up one more thing. Let's see if we actually have it here, and that's Y charts. Let's look at price to sales ratio forward as well, and let's take a look at EV. EV to EBITDA, is that what we want to do? Maybe PE ratio, like forward PE ratio. So here we can see Huya for a good portion of time was always trading in forward price to sales ratio a bit higher than Doyuu. That for until when the merger happened, you can see they kind of tracked each other a little bit closer. Now that the merger is not happening, they're starting to diverge again. I guess the investors still believe Huya is the top dog here. If we take a look at forward PE ratio, the story is a bit different. Doyuu always seems to be a bit higher with Huya on the bottom. At the same time, right now, it's kind of giving us the same thing. So I want to say both of them are kind of valued. And actually, the valuations right now are cheaper than they were in January of 2020, even though these companies have grown a lot bigger than they were. And when we take a look at forward price to sales ratio, right now, after COVID situation, both of them have become bigger companies. They have more consumers and they have more eyes on them, which I do believe is great news for the company. So in form of financial metrics and technicals, they definitely do not seem overvalued. In my opinion, they seem the opposite. Again, stock prices can continue to go down. Right now, my overall favorite is Huya, and I think I'm going to keep it at that. But Doyuu doesn't look too bad. So let me know in the comments below, guys. Are you planning on buying any Huya or Doyuu in the future? Take care, have a good night, and see you next time.